All right, here we go, part two. I'm going to go over some, try to do this a little bit quicker. Some of the stocks that I think that I've gone over in the past, and here we are with Facebook on a daily. Uh, as you can see, Facebook has had a great run last year, and but we identified the break of this trend here a couple weeks back in March, and that was your first warning that this thing is getting broke this accelerated trend. Maybe time to get out, and maybe try to buy it back lower. At that point, there was some support in here, which it bounced at, and then did a feeble bounce. Then it broke below. The next level of support was at this point. I was looking up in here in this lower 60s area, where this gap occurred, and it really, bounced there for maybe half a day, if that, and then it really sliced through down to 60. It caught a little bit of support at that 60 level, bounced in, but then again it made a new low all the way down to 55. Had a nice bounce, but the only good thing I see right now is if this low from Friday holds up, and we kind of stay in this range, that would establish a higher low, right? So that's really what we want to see. You want to see the bleeding to stop, and this to consolidate in here, and then at some point break this downtrend. And once it does that, that means things, at least technically, have changed. At least on the daily level. So I know we talked about 60 being an area of support, which is right at these levels, and you know it's right about there right now. So I think you sold puts, so I'm sure you got a nice premium on them. So if the stock even closes here when those puts expire, I think you said they were in May. You know what? You still make money because I'm sure you made a premium that was more than where we are. So the key is for this to really hold up in the $60 area. High 50s, 60s. Really want to see this low hold up, right? So hopefully that's the case. The moving average is here, so it's right around the 100-day. I mean, the 200-day is still down in here, so it really still is in a bullish type of move, even though we have had a correction in here. But that's how it goes, So we'll see. So Facebook doesn't look too bad here. I'd like to see it consolidate and then break this downtrend, and then maybe it can try to go higher again. Twitter, on the other hand, has been a real shit show. It's really been a disaster. So there were plenty of areas to get out of this thing. I think that the complexion changed on this earnings. Bad earnings. Of course, it made a decent move off those earnings, but then it really failed in here. And I remember talking, doing some videos or doing some analysis where the 55 level needed to hold up, and when that broke, I sold it in here, even though it bounced around, and then it just continued to break these levels. So you had plenty of opportunity to get the hell out of this thing as it was going lower. 50 was the other level right in here that definitely didn't want to see gold below, and sure as shit it did. And then when it did, it really accelerated its down move to 40. Now we're talking, $40. I mean, that's a huge, again, I know sometimes you talk about, never sell, never sell. Well, that's great. The one in a million that you get a price line or something like that. But the right answer is to sell these things or lighten up. You can always hold a core position if you really believe in it, but it's you want to. It's always smarter to trade around a position to when something like move like this you break above this resistance level and it's looking good to hold a bigger position, and then at some point you lighten up, and you definitely should have or could have lightened up as this thing went lower. So hopefully that's the case. I think you also said you sold some puts in here, so we'll see what happens. I think Twitter has another earnings, and we'll see. They're on the hook, man. It's put up or shut up for the people at Twitter to put out a good earnings. And if they don't, this thing breaks the IPO lows in here, then it just will continue to get crushed, and will not be good at all for this entire space. Another stock obviously is Apple that we've been following. and that was actually a couple weeks back doing very well. It broke above this downtrend, and I figured, hey, things may change along here, but of course then the whole market went to shit. And then you know, and like I said, I wanted to see it hold above this line and stay above this line. So it kind of stayed above this line, but then it kind of broke below, and at the same point as it broke below this line, this support area, it broke below this support area, and now this is all resistance again. This, in fact, you see that it bounced up back to this trend line and sold off again. So this continues now, was support, now it's resistance. You know, this red line right here. So you also have some moving averages below, and you know what, the way the state of the market is, I'm not going to just say Apple is a total shit, piece of shit, but hey, it's whole Nasdaq's getting crushed, so is Apple. I definitely want to see it stay above this 515 area right in here, right? That's going to be a pretty important support level right now. We'd like to see it hold up and then try to establish, make another move above, and then, you know, we'll see how the market goes from there. So that's Apple. DDD, glad you never bought this crap. Hopefully you did listen to me on this. Well, you didn't listen when I told you to buy it down here, but more than likely you may still have owned this fucking crap right now, and it's just going, this is really going to zero. So, you know, remember I bought it on this day, I sold it a little bit here, and I sold some more somewhere in here, and then I bought some back in here, and then I sold it all on this earnings day. Broke, you know, again, technical analysis tells us the state, you know, the state of how things are, and when support levels break down and resistance levels hold up, and I mean, this thing has really gone to shit. I mean, this and SSYS, and I know you were looking for it to be a takeover target, and it still may be, but it may be get taken over at 25 cents a share. So we don't want to buy it at 75 and hold it to 25 cents a share when HP takes it over. So SSYS, same boat. This actually looks a little bit better than DDD, but still, it's not. Look, this whole space has been getting crushed. This stock, this was one of the smaller 3D printers. Look at this thing. You know, it was up at $70. Now it's down less than 50% off sale. So another stock I remember you were in, we're looking to buy back is 14Apr. I told you not to buy it. You had a bid in at 16. I told you that's probably not a good idea. You know, 16 broke, and it went to around, you know, went off $1, which isn't too bad. I was expecting it to actually go down to this more along the lines of this $14 range. So, you know, it is making lower lows, though. That's not a good sign, and lower highs, not a good sign. It's still stuck in this downtrend, so I would not touch it until this downtrend breaks at the very least. So hope you're staying out of it, because right now you might think, I bought at 16, it's not too bad, it's only 15 and change. But if it breaks this $15 level, guess what? 14's not far away, then 12's not far away, and who knows how much lower this can go. I'd much rather wait for this thing to break this downtrend, and then that would be the time to maybe get back involved in this thing. Anyway, the whole momentum space, as you know, is in bad shape. Biotech's getting crushed, and it is what it is until that's all over. I haven't really seen a capitulation yet. You know, so I'm not. You know, the defensive areas are where you want to be. Bonds have been doing well, so that's why utilities have been doing well, and that's where you want to be right now until things have changed. So you really want to continue this defensive posture, and kind of keep the powder dry, and wait for, because more than likely you will get lower prices to buy back, and that's really what you want. So anyway, that's going to be it for now. If there's anything else you want me to go over, I can just email me, and next week I'll be back where I'll be watching the market a little bit more, and like I said, go over some more stuff. All right, so hope you are well, and I'll talk to you soon.